And for some more perspective on the Canadian market, we're joined now by Brianne Gardner. She's a senior wealth manager at Velocity Investment Partners with Raymond James. Brianne, great to see you as always. And I wonder what you make of the fact that the TSX starts this new week in all-time high territory.
Yeah, thanks for having me as always, John. I think we saw the Canadian stocks are really participating and enjoying this broad-based rally this year, a little bit opposite to the U.S. stock market, which has been a little bit more carried by a handful of names, as you mentioned, that Magnificent Seven. And I think we saw TSX was up last week 1%, S&P 500 up about 1.5%, NASDAQ around that as well. So we have seen markets recover from that sell-off we saw about 3 weeks ago. And the TSX we saw rise to an all-time high on Friday, with really energy and financials contributing to the broad-based gains. And I also think, assisting that was the optimism out of the U.S. markets, because we are so closely tied to the states. We saw Powell come out saying that the time has come to lower rates. And I think we saw, rallying across the board there between all the indices. So the TSX is up 11% year to date from a price return standpoint, almost the same as the equal weight S&P 500. But I think it is important to note that the top three sectors make up more than 60% of the index weight and contribute 75% of the TSX year-to-date performance. So they are really controlling the direction of the markets. And we like to call them kind of the Northern Six. Everyone's talking about the Magnificent Seven, so we've decided to come up with the Northern Six Canadian stocks that have really helped lead the TSX to its record high.
I like that. And I guess if we're looking for the reasons behind the record run, if you had to summarize it in one or two factors, why do you think stock market investors have been pretty positive?
Yeah, I think looking at even the top three sectors carrying the TSX, energy, has contributed about 3.3% to the TSX performance, financials 3%, and materials 3%. So right there, you're over 9% of the 11% return we've seen. I think that the largest companies, if you're looking at Royal, Enbridge, CNQ, TRI, that have helped push the TSX higher. I do think that, financials is a big industry in the TSX. And as you mentioned, we're going to continue to see earnings out this week. The financials make up 30% of the weight and have carried 9.9% of the return year to date. So again, something that we're watching closely. We still believe, to be honest, based on the performance we've seen out of the U.S. stock market for the first half of the year, that the TSX could actually beat the S&P 500 this year, as we're starting to see some indicators turning positive for the first time in 18 months. So we look at something that Bank of America has created, this Canadian cycle indicator that has been positive, and the TSS index has outperformed the S&P 500 60% of the time by over 4% the next 12 months. So again, we see the TSX is trading at its steepest discount to its American counterparties in history. So we are a little bit more bullish and have started to tilt our portfolio a little bit more over to Canada than we've been super overweight U.S. recently.
And I wonder whether or not there's room for multiple sectors to have reasonable performance. The only reason I bring that up is we had a veteran investor, Ken Fisher, on at the end of last week, making the case for tech stocks, noting that on the up days, tech has generally had the best performance, on the down days, sometimes the worst. But if you're bullish on the markets, and he is, then he wouldn't be betting against tech. Obviously, Canada, and you laid it out nicely there, has less tech exposure. But if interest rates are coming down, I mean, there's even been research by the equity research team at CIBC suggesting there's money that could be in things like GICs that might find its way into Canadian dividend stocks. In other words, is there an argument to be made that if it's a bull market, that money could flow into a whole host of sectors? Or do you think investors really are going to have to make some hard decisions on where they need to go for outperformance?
Yeah, I think tech is the biggest industry in the S&P 500, right? More than 30% of the S&P 500 is made up of tech. They have returned about 16.8% return year to date. We still are bullish as well on the markets over kind of the next 12 to 18 months at this time based on the economic data that we're seeing. I do think there is area of opportunities. And especially if we are talking about the U.S. versus Canada, we still expect to see a broadening out of the S&P 500, right? We have seen that narrow market participation, whereas with the TSX, we're seeing a little bit more of multiple sectors participating in the rally, which is showing us, we could continue to see things go higher. And we would like to see that out of the U.S. as well. I think even looking at earnings out of Canada, we saw the TSX 60 emerge from its earnings recession in Q2 with results growing 12% year over year, beating the S&P 500 10%. And I think with the interest rate differential, we're going to see September what happens with Powell. Our expectations are for a cut out of the U.S. But between the two countries, Canada and U.S., there is this widening economic growth differential that is starting to now narrow. I think conditions are shaping up for the TSX to outperform. So we still like financials, materials, utilities, telcos that should really rise as rates continue to drop, and we will likely see those sectors bounce back. Same thing with energy, slightly positive outlook, and we likely expect to see that kind of stay. So we have 3 more rate decisions by the end of the year. We believe, at least for Canada, there will be 2 more cuts. The U.S., we're expecting to see 2 as well. But again, I think given the work that we've seen out of Canada cutting earlier, the cutting cycle should also result in a bigger boost to the Canadian economy in our view. So, which is why we are a little bit more bullish on Canada at this time.